Hi, I'm Anup, and I welcome you all to Blue Saffron, the podcast program of corporateshitak.com, sponsored by Jani Plastics. And you're about to receive knowledge on Indian and Australian GST, goods and service tax. Yeah, you got it right, mate. Let's get started, shall we? The supply trivia with regards to Indian GST. Friends, when a GST registered person sells either goods or services to the recipient, it's called the supply. The supplies are of various types, and there are many aspects of it as well. Let's see what are those. The maximum retail price of the supply, the MRP. Every supply has it. The customers did not pay GST over MRP as it is inclusive of the GST. What is zero rated supplies and how it is different from exempt supplies? Now, no tax is applied on either zero rated supply or exempt supplies for the outward supplies. So when you're selling the exempt supplies or zero rated supply, you don't need to pay the tax. However, zero rated input supplies are GST free, whereas input supplies of the exempted items are not. What I mean to say here is, if you're purchasing for making the item for exempted supply, you still need to pay the GST for that purchase. On the contrary, if you are making the purchases for zero rated supply, it is free throughout and you don't need to pay any GST. The composite supply, now what is that? A supply of goods consisting of two or more taxable supplies is called the composite supply, where one of which is principal supply, for example, goods that is packed and transported with insurance. So here, insurance, the transportation, the packaging, all that is non-principal. The actual goods that is packed and transported and is insured, the actual goods is called the principal supply here, and altogether it's called the composite supply. It is different from mixed supply. Now, what is mixed supply? A supply of goods that constitute a combination of more than one goods with single price, where neither is composite supply, is called a mixed supply. For instance, the package consisting of the canned food like baked beans or aerated drinks. It has a single price on it, and that's a mixed supply. Now, let's see how the invoicing happens over the continuous nature of the supply. When the supply is provided continuously, like electricity. Let me explain you with my company, Jani Plastics. It's a plastics manufacturing company situated in the industrial estate where the MSED, the Maharashtra State Electricity Distribution Company Limited, provides the continuous supply of electricity. In this case, the generation of the invoice has to take place as and when the successive issuance of the statement of account takes place. It is often successive payment that is considered as the base for invoice generation as well in certain cases. Now, the difference between the interstate and intrastate supply is very simple. The supply of goods or services within the state is called the intrastate supply. For example, Mumbai city is situated in Maharashtra state, and if the buyer and the seller or the supplier or the recipient are within Maharashtra itself, then that's called the intrastate supply, which attracts the state GST for the state to levy, and the equal amount of tax goes to the central government in form of central GST. If the supply is across the states, then it's called Interstate Supply, and that comes under IGST Act, and hence it attracts the IGST only. So my dear listeners, I hope you enjoyed the audio. I also hope there was some takeaway for you. Signing off now. We'll come up with more interesting episodes. Till then, take good care of yourselves. Keep liking your one and only Blue Saffron. Cheers. Bye-bye.